Hello and welcome to Trading 5 Talents. In today's video, I'm going over my week 2 review of the cash secured put and covered call list from optionsellerroi.com. There's a link to this website in the description, and last week's video, my week 1 video, showed all of the filters and how I set up the screen, and I'll just briefly cover that right now. So let's start with a put list, and I took a screenshot of what that list looked like from last week. Here's that screenshot after entering in all my filters. So I'm looking at all of the lists. My moneyness goes from 10% to 25%. I left this as the default open interest of 100, and my DTE min is 0 to 7 because I'm looking only for the weekly play. 2% ROI, and then my delta minimum filter is negative 0.3 because I'm looking for approximately a 70% chance of profit on these short puts. So after running the screen, I come up with 4 different plays, and of these 4 plays, I do a further screen that I can't do up here in these filters. I just sort of do them manually, and that is I'm assuming a $5,000 working capital. So for a cash secured put, that means the strike price has to be $50 or less. So this one down here, GME, would not be a consideration because you would need $14,500 to put this play on. The second thing that I'm looking at after I run the screen is that the premium has to be 25 cents. Or greater. And again, this is just personal preference. You can do whatever you want, but that's just my preference. So these top 2, IQ and TLRY, would not be a consideration. So that only leaves this third one here, this AMC play for the 2050. The third thing that I do after looking at the screen results is I want to make sure that the earnings do not fall into the week that I'm running this play. Here you can see the earnings is not until May 6th, therefore we're safe. So this AMC play is the one that I would have put into my short list for consideration of a cash secured put. So let's go back to the spreadsheet. Right, and you can see that here, AMC, and the put strike price that was suggested was $20.50. Here, the last week's close, so this is the week before I'm entering the play, and I entered the play this past Monday, so this would have been 2 Fridays ago. So $23.30 for the stock, 68-cent premium. Now, all of these 3 numbers right here were from the list values. Now, it actually opened on Monday. You can see there's a small move downward, 23.04, and the premium was still pretty good, 62 cents. So that would be a $62 profit. That would be a pretty good profit if you entered the play at this value. Now, over the week, you can see what happened. And you can see that it just went down all week. You can see that here, and the spark line goes up and then just goes down. Now, because this is a cash secured put, the profitability of the premium that you're selling is moving inverse, or it's inversely proportional to the stock price. So if the stock is moving downward, the premium prices are moving upward. At least your profitability is moving upwards. So you can see stock moves down, put prices move up. But because we're selling as the put prices move up, that's not a good thing for us. We're selling that time value. So we want the prices to move downward. So with this increase in put value, the cells highlight red, the spark line is red. And we can see that on Friday, AMC closed at $18.25. That is lower than our strike price of $20.50. That makes this put in the money. Therefore, we would have been assigned this put. We would have had to pay $2,050 to purchase 100 shares of AMC, and so we would not have considered this a winner. So we'd still own the shares, and now we can run covered calls on it if we want, but in terms of a winning and losing, this one would not have been a winner. There was a 3% ROI, which was calculated by the premium that you received, assuming that you got at 62. So $62 divided by the collateral that you would have had to put up, $2,050. So the prices down here at the bottom, these are all per share prices. So 62 cents times 100 shares would be $62. 68 cents times 100, $68. So the overall ROI is 62 divided by 2050, and that would be a 3%. That would still have been a very good play, and now you have 100 shares of AMC. All right, that's the puts. Let's look at the calls for this week. All right, there's a lot more going on in this spreadsheet. There are 10 different calls that were recommended. Here are the filters that I used. Again, all lists default minimum open interest, 7-day DTE, 2% minimum. I'm sorting by the strike price, and then I'm looking for premiums that are greater than 25 cents, strikes that are less than $50, and I don't want earnings. And I'm running the screen on the weekend so I can make a head-to-head comparison with the other website I am reviewing. Now, what is in this goldish color is the one that I actually did with my own money, and this is actually a carryover from last week. So last week, I purchased 100 shares of NKLA and sold a covered call, exited, I believe, on Friday, 2 Fridays ago, and then I entered another covered call, which was this one here, and it was actually suggested to do the same thing, and I was also profitable on that one, as you'll see. Down here in the blue is something that I'm trading similarly to. I'm not trading this strike exactly, but I'm trading something of a similar nature in AMC. Right, so here are my 10 tickers. Again, I'm just choosing 10, and it's the same setup as before. I'm showing you the suggested strike prices based on a Friday close, and then when it actually opens up on Monday. If the number is green, that means it gapped up in terms of stock value. If the number is red, it means it gapped down in terms of stock value. For the options, if the number is red, it means it gapped up in premium value, because we want these premiums to decrease. These are covered calls, meaning we purchase 100 shares, or at least own 100 shares, and then we sell a call against those shares. So we are selling an option, we are short an option, therefore we want the premiums to decrease. So if the premiums increase, it's not profitable, it's red. If it decreases, it is profitable and it's green. So you can see 26 to 31, red, 59 to 53, green. All right, so here's what happened over the week, and we'll just look at it with the spark lines because they're all very similar. Stocks go up during the middle of, or the beginning of the week, and then they just go down throughout the end of the week. Every single one of these, as you can see, and if you compared the closing stock price, they are all below the call strike price, meaning that none of these were actually assigned. Therefore, you got to keep all your shares of each of these tickers, and you got to keep all of the premium that you received from selling this call against it. Now, what can you do with all of these shares? Well, you can run the same strategy for the following week. You can sell covered calls at these different strike prices. So if you've been following the markets, you know that this week was pretty red in the market. So this is not surprising that everything was out of the money. All these calls were out of the money. And here you can see the final ROIs. The way that I'm calculating these ROIs is I'm assuming you are receiving this credit for the covered call, let's say 31 cents, and I'm assuming you're purchasing 100 shares at the opening price, which would have been $4.56. So 31 divided by 456, that would have been 6.8% ROI. Let me now show you some of these plays, and would I have entered these plays on Monday morning? Well, if the stock opens at 456, you could sell it in the money call at $4.50. So you're going to lose, if it got called away, you would have lost 6 cents, right? You buy it at 456, sell and have to sell it at 450 if it were assigned, but you would have gained 31 cents. So that would have been profitable. Here, it opens at 872, but you are now selling at 850. So you're going to lose 22 cents. If this gets assigned, but you're going to gain 53. So yeah, that still would have been profitable. Here at 1008, you're selling it out of the money call at 1050. That's fine. This one's nice. This is an at the money call. So you buy your shares for 1351, and then you agree to sell it for 1350. So if it gets assigned, you would only lose a penny per share, but then you would gain 55 cents. So 1419, lose 19 cents if assigned because you're selling the 14 strike, but you gain 51. 1979. So many of these, you can see they're in the money calls that are suggested. Now, I do want to point out that I would think the better way to run this screen for option seller ROI is not to do it on the weekends, but to do it Monday morning when the market opens, and not probably exactly when the market opens, but maybe about 15 minutes after the market opens. And for two reasons. One, you can see that there's a lot of gaps. Okay, 1905 to 1979, 2380 down to 2304, or 2631 down to 2588. So you have this weekend movement, these gap downs. And because this website, Option Seller ROI, has the wonderful feature of being able to run the screen pretty much at any time, there's no reason to run it on the weekend like I'm doing and showing here in these videos. Ideally, what you would want to do is wait till all that volatility shakes out in the first 15 minutes of the market open, then run the screen. You'll probably have a better list to go through and make your play for the week. Yeah, you might lose a little bit of premium waiting, but still, I think you would be, you probably wouldn't see as many in the money covered call suggestions. The only reason that I'm running this screen on the weekends is so that I can compare it to the weeklyoptionslist.com, which is run on the weekends. But otherwise, what I've done, and maybe I'll make a video on it, is I use this screen during the week and only looked for a 3 DTE covered call play, and I was very profitable on that trade thanks to this list. So that's just something to consider. If you see all these in the money plays, you're wondering why that's happening. It's because I'm running them on the week, running the screen on the weekend. And if you ran it market open Monday morning for that week, then you probably wouldn't see these types of plays. All right, so if you have any questions about this week's plays and what happened, then go ahead and leave a comment down below or ask me on Twitter at Trading5Talents. So if you want to keep up to date with OptionSellerROI.com and weeklyoptionslist.com, with these weekly reviews, then go ahead and click on the subscribe button and turn on the notifications so you can know when those videos are coming out. Until next time, trade wisely and take care.